Hello, my friend. Welcome to Charlie Retail Invest. Let's track the latest trend in US economy and share our recent investment in stock and bond markets. Today is Tuesday, August 12th, California time. In this video, I want to highlight a stock with a great potential. If we were to identify the next Palantir, whose market capitalization steadily climbed from a few $1 billion to over $100 billion in 2 to 3 years, then this high-flying stock, which is closely tied to US national security and involves military and materials industry, would definitely be in the top three pick. Today's program marks the first time since the launch of Charlie Retail Invest that we've been able to offer you a great opportunity to truly change your life and help you steadily achieve a big profit. I hope that there will be more opportunities like this in the future, and I hope you enjoy it. Thank you for your company. Well, the story begins with the US-China trade war. On March 2018, during his first presidential term, Trump announced tariffs on all imported steel and aluminum products and planned to impose a 25% tariff on $50 billion worth of Chinese goods. In addition to imposing retaliatory tariffs on US goods, the Chinese government has taken countermeasures, and another major means was to significantly reduce the export of rare earth materials to the States. In April of this year, 2025, Trump began to impose an additional 34% tariffs on all imported goods from China, bringing the total tariff on Chinese goods to be more than 100%. The Chinese government retaliated by imposing a 34% tariffs on US goods and expanding its export controls on rare earth minerals. As the world's largest exporter of rare earth minerals, China's most effective countermeasure to the US trade war is to restrict its exports. This is one of the few tricks in which the two world-class superpowers, China and the US, can inflict pain on the Trump administration in this trade war. And the main reason that this strategy actually works is because the United States is highly dependent on China's rare earth supply chain. Although the United States has rare earth minerals, China is the only largest rare earth mining country. And more importantly, it dominates the refining, separation, and processing technology of rare earth. In the short term, the United States has not established its own rare earth supply chain yet, which makes the rare earth card by the Chinese having a potential strategic power over President Trump. And although Trump can bully allies such as the European Union, Japan, South Korea, Taiwan, and Canada, he cannot win over China this time, so he also has to tackle. And after China announced export controls on rare earth minerals, the United States held bilateral talks with China in Geneva, Switzerland on May 12th this year, and they reached a 90-day tariff suspension agreement. The United States agreed to reduce tariffs on China from the threatened 145% to 30%, and the Chinese agreed to reduce tariffs on the United States to around 10%. Then in June, Chinese and American negotiators held a second round of negotiations in London, United Kingdom, and they reached a preliminary consensus on the framework of a trade agreement. At the end of July, representatives from both China and the US held a third round of talks in Stockholm, Sweden. After that, Trump signed an executive order to extend the grace period of tariffs on China for another 90 days, providing more time for the two countries to finally reach a comprehensive trade deal. If we look at the consensus reached between China and the US, the core is that China agreed to relax its export control on rare earth minerals, while the United States lifted some export controls on artificial intelligence chips technology. And that is why in the past few months, the stock prices of both NVIDIA and AMD have risen sharply because these two chip manufacturers can sell H20 chips to China again. Then why are rare earth minerals so important that they have become an effective means for China to strangle the United States? Well, this is because the rare earth minerals are indispensable basic materials in various industries, such as national defense, military industry, semiconductor chip manufacturing, batteries for making electric vehicles, and smartphone production. In May of this year, shortly after China implemented export control on rare earth elements, the American automakers were unable to import rare earth from China, thus leading to widespread production halts. Yes, the effect was immense. Having said all that, we finally get to today's main topic. In order to address the fatal flaw of long-term dependence on rare earth exports from China, the US government has begun to lead the rebuilding of the supply chain workflow for rare earth material production within the United States. Our protagonist, MP Materials, headquartered in Las Vegas, is the only company right now in the United States with a complete rare earth supply chain. MP Materials owns the only active rare earth mine in North America, the Mountain Pass mine in southeastern California. The company not only mines rare earth ores, but also refines and separates them at the same location to produce high purity rare earth oxides. Currently, MP Materials is working to expand its business downstream of the industry chain and has already built a rare earth magnetic production facility in Texas. Their strategic goal is to achieve vertical integration from ore to magnet, thereby reducing dependence on China's refining and magnet manufacturing capabilities. MP Materials has been on a roll in recent weeks with good news. On July 15, the company announced a long-term partnership with tech giant Apple. Apple has pledged over $500 million to build MP Materials' rare earth magnetic production facility in Fort Worth, Texas. Under the agreement, Apple will purchase rare earth magnets produced at MP Materials' Texas facility for use in the manufacturing of its iPhones, iPads, MacBooks, and other electronic products. Magnetic materials are expected to start delivering in 2027. At the same time, the two companies will jointly establish a new rare earth recovery production line in Mountain Pass, California. The production line will be made from discarded electronics and industrial waste. The two companies have been collaborating on a technology pillar for nearly 5 years to recycle rare earth materials and reprocess them for use in Apple products. For MP, the partnership with Apple marks a significant milestone in its business operation. It not only secures a stable source of revenue and financial support, but also enables the company to transform from a mere rare earth miner into a rare earth magnetic manufacturer, significantly enhancing its value and position within the rare earth industry. On July 10th, MP Materials and the US Department of Defense have reached a multi-billion-dollar cooperational agreement covering investment, procurement, and loans. First of all, the US Department of Defense will purchase $400 million worth of MP Materials convertible preferred stocks. With this acquisition, the Department of Defense have become essentially MP Materials' largest shareholder, holding approximately 15% of the company's diluted equity. This effectively gave MP Materials official backing from the US government. Secondly, the Department of Defense has pledged to purchase all the rare earth magnets produced by MP Materials' new second magnet manufacturing plant over the next 10 years in order to meet its defense and commercial needs. Additionally, the Department of Defense has provided the company with a $150 million loan to expand the heavy rare earth separation capacity at the Mountain Pass mine. These materials are critical for the next generation manufacturing of US military and aerospace systems. Overall, these collaborations provide MP Materials with the funding, demand, and price stability to build a complete rare earth materials supply chain within the United States. This is also crucial for the national security of the United States. If a war breaks out in the future and other countries begin to restrict the export of rare earth materials, the United States will have the card of MP materials in order to avoid being cut off from the basic raw material supply for industrial production. Now that we've covered so much on the backgrounds of the company, let's take a look at MP's stock price performance. Capital is undoubtedly the most discerning investor, and following China's export restrictions on rare earth back in May of this year, MP Materials stock price has since then skyrocketed. As of August 12th, MP's stock price has exceeded $70, up more than 300% from $16 at the beginning of this year, making it the best performing company in the US stock market. Then many people will worry about that this might be another pump and dump trick of the Wall Street. The stock price of a small company was hyped up by the Wall Street analysts in a short period of time, and then after retail investors entering the market, Wall Street will start to dump the stock price and cut the leaks of small shareholders. Myself had the same doubts when I first heard about MP Materials, but after digging deeper into the company background, I've changed my mind and now I'm more bullish on MP Materials prospects for the next few years. Last week on August 7th, MP Materials has released its financial results for the second quarter of 2025. The company's total revenue for the second quarter was $57.4 million, which is an 84% increase year over year, exceeding market expectations. This was primarily due to significant growth in sales of rare earth oxides and magnetic precursors. At the same time, what is even more surprising is that although the company is still in a net loss state, its net loss in the second quarter has actually dropped to $30.9 million, which is lower than the loss of $34.1 million in the same period of last year. The adjusted loss per share was $0.13, which is better than $0.17 expected by the Wall Street analysts. The market expects that the MP Material Company will likely return to profitability and achieve positive EPS by the fourth quarter of this year. The company's business is also shifting from solely selling rare earth materials to marketing its magnetic business. Its magnetic division achieved revenue of $19.9 million for the first time in its history, demonstrating that the company's vertical integration strategy is gradually being realized. If we look at the fundamentals of MP Materials, we will find that the company's current market value is around $13 billion and its operating profit margin can reach over 11%. Among industrial materials companies, this profit margin is very high. The current PE ratio is negative 120, but the forward PE ratio in 1 year time frame is projected to be 65.0. Meanwhile, the PEG ratio, or the ratio of PE to earnings growth, is only at 1.2. Considering that Palantir's PEG ratio is at 10.6, which is 10 times higher than MP. MP Materials' current PEG ratio is very close to NVIDIA's PEG ratio of 1.3, and NVIDIA is already the world's largest public company with a market capitalization of over $4 trillion. This means that the market is far from overvaluing MP Materials. On the contrary, its valuation still has significant room for future growth. Based on the current market forecast for MP's EPS growth, we can see that for the entire 2025 fiscal year, the company's EPS will be at negative 0.39 and its losses will be narrower than in 2024. By next year, which is 2026, MP's EPS will rise to 0.75, at which point stock price will have significantly increased compared to the price at this year. And by 2027, MP's EPS may reach 1.33, an increase of more than 70% compared to 2026, which would be very exciting. I believe that by 2026, MP's PE ratio will most likely not stay within 100, because the market will show signs of chasing into buying the company stock. So by then, MP's P/E ratio will most likely be between 150 and 200. This means that within a year, MP's stock price still has room to rise by another 50 to 100%. If we compare across different industries and look at the stock price performance of the hottest defense technology stock, Palantir, over the past 5 years, and then compare it with the stock price performance of MP, we will find that Palantir has increased by as much as 1,885% over the past 5 years. While MP has surged over 300% this year, its overall increase over the past 5 years has only been 497%. If the market's speculative enthusiasm for MP reaches the same level as Palantir, MP's stock price could triple within a few quarters. Of course, Palantir is an AI software service company, and MP is an industrial materials company, so a direct comparison might not be appropriate. Instead, let's see the market capitalizations and PE ratios for the top 10 industrial materials companies in the US. As can be seen from the table, Lind is the leader in material stock with an overall capitalization of $222 billion and a PE of 33, while CRH, which ranks in the middle, has a market capitalization of $73.4 billion and a PE of 22. If MP's market capitalization reached CRH's $70 billion over the next 3 years, its stock price could rise by more than fivefold, potentially exceeding $380. Therefore, I began buying a large amount of MP stocks on August 11th in my personal investment account, and now MP investment accounts for 20% of my total portfolio. I will continue to hold this stock. And the biggest risk in investing in MP materials is actually failing to hold on to this stock in the long run. We could see the stock price pull back by 10% or even more due to short-term policy adjustments or news on tariff wars. If we reduce our holdings or seek profits at this point, we might risk missing out on the substantial more gains that will come from continued price increase over the next few quarters. Of course, investing in a single stock does carry significant risks, so I recommend that if you are looking to invest in MP stock for long term, you can keep the weighting of this stock investment to be between 5% to 10% of the entire portfolio. In this way, you won't be tempted to sell off the stock due to temporary price fluctuations, and then this approach can also prevent the overall performance of your entire portfolio from being significantly impacted by the fluctuation of a single stock. Finally, this is the CRI AI investment recommendations as of August 12th. The system suggests a 50% allocation for stocks, 20% for ultra short-term treasuries, 20% for gold, and 10% for Bitcoin, respectively. Because gold prices fell today, the AI system recommends selling more short-term treasuries and buying more gold ETFs instead. And the SP 500 index hit a new record high today, closing around 6,445 points, as the market's expectation for a September interest rate cut by the Federal Reserve increased. So if we were to buy US stock index ETFs such as SPOG or QQQM at their all-time highs, the return on investment would be somewhat lower. Therefore, our AI investment system maintains the 50% stock allocation. If the US stock index experiences a correction in the coming months, then our system will likely increase the stock holding percentages. Of course, if you already have held US stock indices, you don't need to sell to lock in profits, because with the Federal Reserve starting to cut interest rate, the bull market in the US stock market will likely continue to at least until the fall of 2026, before the US midterm election. This is the latest CRI portfolio holding as of August 12th. Our top 3 holdings remain unchanged. AMD, Google, and Eli Lilly. Today, I will sell all of my Novo Nordisk shares and purchase more MP shares, and all other investments remain unchanged. From the beginning of 2025 to August 11th, the overall return of the CRI investment portfolio was at 10.73%, which is slightly higher than the 9.2% of the S&P 500 index. We hope that in the next few months, our investment return rate can further improve and bring more surprises to us. And that's the whole story of today's video. If you are a retail investor like myself and would like to know more about the US economy and follow our most recent trading activities, please consider subscribing our channel, Charlie Retail Invest. Thank you so much for your time and support. I'll see you in the next video. Please take care.